A very warm welcome. My name is Harri, Lloyd, Davies. I'm one of the partners here at Bevan Buckland Chartered Accountants, and we're delighted to be doing this. Is our third webinar targeted really at the charity and the not-for-profit sector this year. We're running these webinars to try and add a bit of value and give something back to our clients, and we'll be doing hopefully one more before the end of this year, probably in November, and then running another series next year as well. Today we're covering VAT. Certainly one of the areas we get a reasonable number of questions, and certainly some of the more technical questions. We're not going to have time to delve into huge amounts of detail today, but we're hoping to do a fairly good high-level overview which will highlight the types of issues that trustees and employees of charities need to be aware of, so that you can deal with a VAT problem or recognise whether potentially you have one. So I'm delighted to be joined today by Rob Perrin. So Rob has been with the firm 17 years, I think now.
17 years. And
Rob specialises in corporation tax and VAT. Yeah. But you do a lot of work, or have done a lot of work over the years in the not-for-profit sector. Yeah. So really experienced and very knowledgeable in all things sort of charity VAT and charity tax. So I'm gonna sort of try and sort of tease out some of your knowledge today, if that's all right, Rob, and hopefully,
by all means,
hand some of that over. So, as I say, it's going to be not too technical today. We're going to go fairly high level, but one of the main things I want to do as well is to almost get rid of some of the myths that do surround charity accounting. So, I was going to start that there, Rob, because I've certainly come across a number of charities over the years that have sort of assumed that because they're a charity, VAT doesn't apply to them. So can we just start by confirming that just because you're a charity doesn't mean you can forget about VAT? Is that correct?
That's correct, yes. Charities, like any other organisation or business, are liable to VAT. So if they do have VATable income, and that VATable income goes over the VAT registration limit, then they have to register for VAT. So yes, there's no blanket exemption from VAT
for charities. No, that's important to understand. And I mean, I think a lot of what charities do is exempt from VAT, though, and it's what we call non-business.
Yes.
And then you've got the other side, which is the stuff that gets charities into trouble, which is what's regarded as a business activity. So Are you able to sort of explain a little bit about what's the differential between business and non-business activities with charities?
Give you a quick example of a business activity. Say a charity decides to open up a cafe in one of its buildings. Now, they're normally there to be making a profit. They want to make a profit out of the cafe. So that would be deemed to be a business activity because the income is coming from the public by buying the food, drinks and what have you. So it is a business activity. On the other hand, a non-business activity tend to be activities where the income is funded, say, by grants or donations, and there's no real view to making a profit on that activity. Your objectives are helping the public or the particular area you're dealing with. So those are sort of like the general sort of differences between business and non-business.
Okay. So as a rule of thumb, if there are other people out there doing what you're trying to do for profit, it's probably business. As you say, businesses don't generally go around donating money or...
No.
So that tends to be, if you can't find other businesses doing this commercially, it's more likely to be non-business.
Yes. However, you do have to look at each case individually. You can't sort of like give it a blanket so that nobody else does this, so it's non-business.
Yeah,
because it could be a new thing you're doing that nobody else is doing.
Or they haven't thought of it yet.
They haven't thought of it yet. So
fair enough.
Yes.
So I suspect this will be a mantra a few times. If in doubt, ask. Yeah. So if you're not sure if what you're doing is potentially VATable, and we'll be putting your details at the end. So ask you the question, then you can give some advice and guidance on it.
By all means, yes.
No, that's brilliant. Sticking on a similar theme, so in terms of, even if you're doing something that is a business activity, that doesn't always mean that you end up having to register for VAT. So what are the sorts of things you can do where you don't have to charge VAT?
Because you have the different rates of that. You obviously have exempt from VAT, standard rate of 20%. You do have reduced rates, and you have zero rating.
Okay.
Now, if your activities are exempt, for argument's sake, if you do training, education within the charities, sporting activities are exempt. So you can actually operate those businesses without needing to register for VAT. because they are actually exempt from VAT.
Okay.
On the other hand, if you are, let me give an example. Just try to bear with me a second.
No, that's right. I mean, the common one I come across, which is zero rated, is generally the sale of donated goods.
Yes, that's at charity shops. Yeah, you get the goods donated, and you sell them on. You can say if it's clothes, you can wash the clothes and that, and then put them out for sale. But you're not supposed to do any alterations to those donated goods.
Okay.
If you do alter them, then you become liable to VAT at the standard rate.
Right. Okay.
Because the donated goods are zero rated because they're donated.
Yeah.
So you just have to bear that in mind when you get donated goods.
And I mean, we'll get into a bit of detail now,
Yeah.
but I think it's important because I mean, zero rated is a great place to be generally because you can sell the goods that you've been given, but you're not having to charge VAT on those goods, but then you can still claim the VAT back on any associated costs. So if your shop has got rent with VAT on it, we can claim the VAT back.
That's it.
With exempt. If you purely got exempt supplies, are you able to register? But I assume the revenue wouldn't let you because there's no input VAT you'd be allowed to claim back anyway. Is that
correct.
how it works?
Yeah, that's correct. If you're purely exempt or all your activities are purely exempt from VAT, HMRC will not allow you to register for VAT.
Okay.
If you have a mix, then you have to look at it and see whether the VATable element has gone over the VAT registration. And then if it has, then you become what they call partially exempt. So there's a little bit more calculation in actually being able to recover any input VAT relating to the VATable supplies.
Yeah.
Because you're not you cannot claim the input VAT on the exempt supplies. But under partial exemption, there are what they call de minimis limits. We may be able to claim all the input VAT that you incur, but those limits are quite low anyway.
Well, I think those limits have been I've been here, I think, 20 years, and I think those limits are I remember one of my early jobs was doing partial exemption calculations for a small charity, and I think the limits are the same now as they were 20 years ago.
They are. So I don't think HMRC understand indexation
or inflation. No,
inflation.
But there we are. No, that's good. So. One of the questions, I mean, can you explain when, what is the point where you have to register for VAT? And I suppose, and following up from that, is there, can you just do it voluntarily, and is it ever worth doing it voluntarily?
Right. The point at which you should register is when you turn over from your VATable activities, and that's not just from one particular activity. You've got to have a look at the whole of your VATable activities that you operate in. And if the turnover from all those activities goes over £90,000 in the previous 12 months, you are required to register. Or if you think your turnover is going to go over £90,000 in the next 30 days, again, you're supposed to register.
Yeah.
So that's if you go over the limit. You can voluntarily register if you're below that limit. For example, if you've got a zero-rated activity like donated goods, you can voluntarily register in order for you to claim all the VAT back that you've incurred in relation to those sales.
I suppose the judgment you've got to make then is the hassle of doing VAT returns, particularly if there's a partial exemption calculation. Is all that hassle justified for the amount of VAT that you're claiming back? If it's thousands every quarter or every month, definitely. If you're only claiming 50 or 100 quid back, there's a reasonable chance you're probably better off leaving it.
Yes,
if it was voluntary. No, that's good. And from a from a VAT perspective, then, if once you've, because you touched on it there. One of these things I've often seen go wrong is people assuming that, it's all right because I'm doing 3 different things and they're all below the threshold. Can you just explain the concept of, look, if it's all in the same legal entity, essentially, you've got to add them all up. You can't treat your cafe as one thing and
that's right, yes.
your shop or whatever as another.
Yeah, that's the whole principle of VAT. It's the VATable turnover of the entity.
Yeah.
So if you are ABC Limited Charity and you have a cafe, say you provide transport where your vehicles take over 10 people, which is zero rated. And because the other thing is to remember is that even though you may have a zero rated supply where you don't charge VAT, the turnover from those zero-rated activities counts towards your VAT registration. So a lot of people forget that because they think, oh, they're zero-rated. They think, oh, we don't count those. But you have to. Unlike exempt supplies, those are ignored for the registration limit. So each entity has to look at its different activities.
Yeah.
You can't just focus in on a particular activity.
So, and again, somewhere where you may need to take some advice. So there are ways potentially. So if you've got two very different activities, and for example, you've got a trading subsidiary below your charity, potentially you can look to put the different trades. But you've got to be very careful because of that splitting rules, and always take advice on that sort of thing.
Yes, you've got to be very careful.
That's good. I think I mentioned at the beginning, if anyone sort of watching does have questions, by all means, pop them into the chat or put your hand up, and I will try and pick up and come back to you. But as I say, we're more than happy to try and answer questions as we go along or at the end today. So pop any questions into the chat, and I'll try and pick them up as we go along.
By all means.
I'm going to move sideways slightly from VAT temporarily and talk a bit about corporation tax.
Yeah.
Because similarly, there's another myth that, oh, well, I'm a charity, I don't have to worry about corporation tax, it doesn't apply to us. That's not always the case, is it, Rob? Do you want to explain how it works?
Charities do have exemptions from corporation tax, for argument's sake, on investment income, interest on bank accounts and savings, also on rentals from investment properties.
Yeah.
They are also exempt from what they call primary purpose trading income. The primary purpose is a trade that is operated under the objectives of the charity. So if it's operated as an objective of the charity, then it becomes a primary purpose. And therefore you're not liable to corporation tax.
So for example, if you had a charity that has been set up to run a care home and it makes profit running the care home, would those profits then not be liable to corporation tax?
That's, in basic terms, yes.
Yeah.
Because the whole objective of that charity is the provision of care to the elderly, and the operation of the care home is providing that care. So yes, that becomes a primary purpose.
So then that care home, in that charity, they decide, right, we need to raise some more money, so heating bills have gone through the roof, so we're going to open a cafe in town. If they make money in the cafe, that's where you potentially have an issue. Is that how it works?
That's it, because that then is what they call a non-primary purpose trade, and you are then subject to corporation tax on that income. So there are other...
And this is where it gets really complicated. So if, for example, someone had set up a charity to run a cafe, part of which the benefit was to try and, to provide low-cost food to the local community, because that's their primary purpose, almost the same cafe, and one charity would pay tax and another potentially wouldn't. Is that essentially it?
Potentially. Yeah. That could be a little bit of a grey area, because, first of all, are you
going to make any money if you're giving the food away for free?
That's it.
So if we go back to the nursing home example, though, so there is a way potentially to avoid that tax, isn't there? So very simply, how could you restructure that charity to avoid paying tax on the cafe profits?
If we take the example of the cafe, what we can do is we can actually put the trade of the cafe into a wholly owned subsidiary of the charity. The wholly owned subsidiary would be a normal company.
Yeah.
Its shares would be wholly owned by the charity. But as a result of that subsidiary is liable to corporation tax. But if it gift aids its profits or its taxable profits to the charity, and you have to do it within 9 months of your year end, you can literally set that gift aid donation off against your taxable profits. So if you had a taxable profit of £10,000 and you made a gift aid donation of £10,000,
no tax to pay.
No tax to pay. Yeah. You have to make sure that you make that gift aid within 9 months of the year end, and it's a money transfer. It can't be just left on intercompany account.
Yeah. No, so essentially, don't be put off going down the trading route because of the tax, because there are ways to be able to reduce or potentially even totally get rid of those tax bills.
That's right, and HMRC actually advocate it.
Yeah.
They don't mind you doing that at all. It's not an avoidance issue at all. They quite happily say do it, and the Charities Commission do it as well.
Yeah. No, that's good. So obviously talked a bit about tax there. We talked about a bit about VAT. There are other benefits, particularly from essentially a VAT perspective of being a charity. So you touched on it briefly earlier. There are certain things that if you're a charity and you're doing it, you won't pay VAT, whereas a normal company would. We're not going to try to list them all today, but are you able to just sort of remind us of some of the common areas?
A couple of them are education.
Yeah.
Education provided within a charity or a not-for-profit organisation. That can be a bit of a grey area, not-for-profit. But if you're a charity and you're providing education services, then they are exempt from VAT. If you're a normal company or business and you're providing education services, they're VATable. The same with sporting activities. If you're a school, and even a private school, we might touch on that in a minute, and you provide sporting activities perhaps to outside public pupils, and you charge a fee for that, because you're a charity, that is an exempt supply. Again, if it's in a normal company,
you'd be charging that.
Supply. Yeah. So you do get those sort of reliefs. Obviously, because it's exempt, you can't register and you can't claim any input VAT back. So that is a little bit of a downside sometimes.
But essentially you're keeping 100% or whatever you're charging for the service, whereas other people would be having to hand over roughly a sixth of that to the revenue.
And you also have to probably charge more to the people using the facilities.
Yeah, exactly, to make it work. So I think, and we may as well pick it up in it now, because it's one of the big changes we're expecting to happen very soon, is that VAT is going to be charged to public schools or to private schools. Yeah. But we think potentially that could have a wider impact depending on how the legislation's drafted.
It is because those private schools don't charge VAT at the moment because of the exemption for education. That exemption for education doesn't only apply to private schools, it applies to other organisations that give training. You could have a community charity that provides a little bit of training to the local community in different areas.
Yeah.
Exemption for training can cover lots of different types of training. So this new change, if the legislation isn't worded correctly, could impact on other charities that aren't actually schools.
Yeah.
So this is what we've got to go through the legislation, the draft legislation, and exactly see what they want to do, which is a little bit of a minefield at the moment. And
obviously it's early days, with it. I think there are some initial drafts published. I'm sure it'll go through, and be revised, but it's just really a message that, that there's a change coming, which you may think this has got nothing to do with me because I'm not a private school. But if you're doing education or potentially welfare or sporting activities, there's a risk that some of the knock-on might hit you. So just keep an eye on it and don't totally ignore it for the next few months.
Yes, because there are maybe potentially things that we can do.
Yeah.
We can have a look at structures and also, even if you are a school and you're going to end up being VATable, we then can look at other issues whereby, you can start now recovering input VAT on your costs. But this is a little bit technical, but if you had a new school wing built in the last 4 or 5 years, as an exempt school, you wouldn't have been able to claim any VAT back on the construction.
Now you have to charge VAT,
now you
potentially.
will be able to potentially claim some of that VAT back because you're changing from an exempt supply to a VATable supply.
Yeah.
So there's things that we can look at to help reduce the burden.
Fair enough.
Initially.
No, that sounds good. And then sort of flipping it the other way around, because one of the other benefits, and this one I often see getting missed, is that if you're a charity, you can actually get some of the people who supply you to reduce the VAT that they charge you. Because normally, if you're supplying goods, you have to charge VAT if you're a business. Yeah. But some businesses can essentially zero rate their supply to charities. Do you want to talk quickly how that works? Yes,
you can. A couple of one of the biggest ones is whereby a charity actually builds a new building. If that building is going to be used purely for the charitable purposes of the building, not as an office block, then you can get the contractor to to zero rate his or their services, you have to supply them with a certificate, because they're obliged to make sure that they get it right.
Yeah.
So that's on buildings. Vehicles for disabled. Again, that's another one. You just got to prove to the supplier of the vehicle that, if normally it's a new vehicle, that you are a registered charity. Also vehicles for transport services.
Okay.
Again, if the vehicle's passenger capacity is over 10 people, then the services are zero rated, so you can get that zero rated. And advertising services, again, if you're looking for advertising services, you can tell your provider, look, we're a charity, and
if you provide the evidence and the certificate,
then they should be able to zero rate it. So those are the couple of sort of examples.
So, and you know, it's certainly the case I've seen that charities have missed these because the supplier didn't realise there were these exemptions available, and you end up paying 20% more than what you should be. So, worth keeping an eye.
Yeah, some of the suppliers, I'm not seeing this hassle for them, but they don't pick it up. The charity doesn't pick it up, and as you said, they end up paying more.
Sounds good. We've got a couple of questions, Rob, so I'm going to do one or two of these. So, would a one-off charity fundraising event, so a football match or a dinner, would that be a VATable activity?
No. Fundraising events are exempt. I guess. Right in my mind. You're allowed to do up to 15 a year.
Okay.
If you go over 15 a year and more regular, you then end up in the realms of being VATable. So a one-off one, you should be fine.
So if you have an annual summer ball or something as a fundraiser, you don't have to worry about VAT. No. But if you're doing something sort of a couple of months, it's a regular lunch club or something, that's where you potentially have an issue.
That's right.
Okay, good. Can you ask a consultant or an external trainer to 0% VAT on training to a charity? Is that one of the ones that's covered, or
no?
No. Okay.
No, that's the difficulty. There are some rules. It depends on the funding, where the funding's coming from for the training. From memory, this government funding can give you the ability to zero rate services, but normal rule of thumb is an outside contractor cannot normally exempt their supply. So it's you'd have to have a look at the full details of that.
No, it's good. In terms of sort of, I suppose, the admin, and we touched on briefly partial exemption. Are there any sort of, what are the major pitfalls, or what are the major sort of issues you have around that initial registration and the ongoing submitting of VAT returns?
I see this a lot. The main pitfall is actually monitoring the turnover of your VATable activities. So the first thing is you need to know what your VATable activities are. Yeah. And a lot of charities don't. They don't really understand that those little individual activities are either subject to VAT, exempt.
Because a lot of charities, you've got several, very effective at bringing in multiple streams of income, but it's trying to understand, right, which ones we don't need to worry about, or which ones do we have to monitor, essentially.
That's right. And once you know which is which, then on a monthly basis, you monitor the total of all those VATable activities on a rolling 12-month basis to make sure that they don't go over the VAT threshold. Yeah. Or when they do, then you're able to know, oh, right, I got to register for VAT. Or this particular activity is really taking off. We think we're going to go over the VAT threshold in the next 30 days, so we need to register for VAT. So that's one of the big pitfalls.
And a couple of sort of, the ones that I've seen, again, catch people out are things like, rental of property or even hiring of facilities, because, rental, we're not going to have time to cover that today because, suffice to say that some properties you would have to charge VAT if you rented them out, other ones you wouldn't, depending if there's an option to tax.
That's right.
So just because you were in your old charity and you thought, well, we used to rent property out and it was exempt, doesn't mean it necessarily is in a new charity, for example.
Right. One thing for just going off on a little tangent. Yeah. When a charity rents a property, if like a commercial property, if they're going to rent it from a non-charitable organisation, and that organisation or businesses are going to charge you VAT.
Yeah.
If you're going to use that property purely for your charitable purposes, not as an office or a general admin office, then as long as you tell that business prior to signing a lease or a contract that you're a charity,
Yeah.
you can what they call disapply what they call the option to tax.
Okay.
So therefore, that business cannot then charge you VAT. So it's just understanding before you sign on the dotted line.
So if you're looking to negotiate a new lease and there's VAT on it, it may be worth having a chat with you to see is there any way that we can save you that 20%, which on a lease could be a lot of money.
Yeah,
so,
and the thing is, the people you're going to lease from, they may think, because that will have an impact on their VAT recovery. So you may have to end up negotiating, perhaps
coming to some sort of arrangement. Yeah,
because they're going to be impacted on that disapplication. So
no, that makes sense. And the other one I thought it was just worth touching on similar is management charges, because again, I've seen this go wrong where the charity's got up to 70,000 of income. But they've decided they've got a linked charity where they share some resource or a trading subsidiary. Yeah. You put through that management charge to recover the costs that you've incurred during the year, and of course management charges are subject to VAT. So just be careful you don't make a last minute adjustment which pushes you over the limit.
The way we can get around that is if those staff have joint contracts of employment, therefore they can work for either charity. One charity may pay their wages, but then they can recharge the wages that...
And as long as there's no profit element, then that's not subject to VAT, is that correct? No, that's very useful. I think we've got another question that's come in. So we've got someone who's receiving VAT invoices from suppliers who are assisting in education projects. So they're paying the VAT on those invoices. Can they put those through the VAT return to claim them back or not, the input tax that they've suffered on the supplier invoices for education projects, or does it depend on the types of project?
It depends on the project. If the charity is providing the education, that's exempt. So therefore, the VAT that they're being charged is exempt for input, so they can't claim it back. But as I said, the VAT is a funny animal, so it's always worth having a look. I can't guarantee that I'll turn around and say, we can get it back. But it's always worth having a look just to see if the education contract is perhaps doesn't fall within the exemption. It's something else. Yeah. So, but if it's purely exempt education, it's exempt supply. Therefore, you can't claim the input VAT back.
Okay, brilliant. I think that's it for the questions, and I think we've probably used up our half an hour slot, Rob. So it's gone very quickly. So
yes,
hopefully that's given everyone a reasonably good sort of initial feel for charities, the VAT issues and corporation tax issues, and how they're likely to impact you. The plan is to do another one of these webinars before the year end, probably a little bit early. We're not going to wait full 3 months. It'll be in November. So please, we'll be putting a link in the chat shortly to provide any feedback on today's webinar, whether it's useful, are there any topics you'd like to know more about. But when we send out the recording to people who registered today, we'll also have Rob's contact details. So if there's more specific general advice you need, Rob will be able to answer those specific questions. And as I say, on that feedback form, there's also suggestions for future webinars. So I'd say this is the third one we've done this year, but we're looking for one more before Christmas, and then we're hoping to do another full set again next year. So any ideas on things you'd like to see us talk about or discuss in the not-for-profit and charity sector, please let us know. But that's it from us today. So a huge thank you, Rob. That's been hopefully insightful and very useful. And we look forward to seeing you in another webinar later in the year. Thank you.